Good morning, good afternoon, and good evening, Alpha Traders. This is your Wednesday version of Crypto in Clown World, coming to you live from the Crypto Caravan, still nestled in the foothills of the Sierra Nevada mountains, looking up to the Tahoe Basin. Beautiful day today, sun's out, dogs are worn out and sleeping. That's when they're my favorite dogs, when they're sleeping. What is the most volatile asset ever known to man doing today? First off, I'm going to start with about a 30-second rant on my favorite buddies, the YouTube Jimmies out there that just want to try to tell their people they should be swing trading Bitcoin. The 4 hour chart, right? The daily, the 12 hour. You guys need to swing trade Bitcoin for the real profits. What a joke, right? Look, the entire alpha trading ethos is explained in one daily 15-minute chart why you do not do that and why you trade low time frame volatility. Period. The end. Rant over. Bitcoin starts the day today. I talked yesterday. Now, what did I say yesterday? I said if the bulls manage to close this daily above the center of the weekly range, that Bitcoin's going to make a run for the middle of the monthly. Did it take very long? No, it didn't. And I was laughing my ass off when I saw this pump right here, right? Bitcoin goes up, exceeds the monthly range immediately in 1 hour, dumps the whole move out. Do you know what just happened if you tried to swing trade that? You got wrecked. Did you get your stop loss taken out? Of course you did, right? Because people are probably like, I'm going to get in this trade. It's going to be powerful. Then they see how really powerful it is. Oh shit, I need to add on to this. We're going to the moon. Liquidated, right? This is what happens. And then what does Bitcoin do? That was the first 4 hour candle. Are you kidding me right now? Look at the wick too. Bitcoin's opens the day, sends a wick to the center of this tight daily price action volatility range. We all know when you get a tight price action volatility range on the alpha trading volatility range estimator that you are going to have a ranging day. I mean, a trending day. Okay. Did Bitcoin trend today? It sure did, up and down. Starts out, bounces off the center of the daily, literally makes a run from about 39.1 all the way to 41.7. Immediately in the first 4 hour candle, Bitcoin gets a $600 move to the top side, seven, and then a $2,000 move to the downside, just to liquidate and knock people out of their positions that got in that long, that don't low time volatility trade and don't take their profits. Then what does Bitcoin do? Right? So when they're still crying and licking their wounds, and all the people that were like, oh, I'm going to get in this short. Yeah, markets are fucked. The whole world's falling into a shit pile. Now Bitcoin's going to 20K. They get in a short. What does Bitcoin do? Bitcoin turns right around and goes right back up to the center of the monthly range. Literally got a wick up to the weekly R1, then rejects. Where does Bitcoin go to? Bitcoin goes down and tests the top side of the 68.3 Laplace distribution range on yesterday's daily candle. Finds support there, runs up above the center of the monthly. And then right before the end of the day, Bitcoin runs up and closes right at the center of the monthly range. Now, before anybody got on this stream, I told MJ, I'm looking for Bitcoin to come down here and test this daily range right in this area somewhere. And if Bitcoin finds support there and bounces and starts to make its way up past this 68.3 Laplace distribution range, it's probably going to do a what? It's probably going to do a 1SD move. We're going to see Bitcoin up around probably 43. Could even possibly make a run to the Laplace 95.4, 44K. Why do I say that? I say that because Bitcoin just closed the daily candle above the first standard deviation normal distribution on that weekly candle, 40,785. Okay. And I think I talked about Monday, if Bitcoin can close a daily candle above that 1SD, close a daily candle back up in this 68.3 Laplace distribution range on the projection from the 41K low, that Bitcoin this week is probably going to make a run at the second standard deviation on this weekly candle. Where is that? It's at 44,287. 44,287. The 95.4 Laplace today is at 44.1. Here's the thing, though, and I even talked about this Monday. That blue dot, that second standard deviation normal distribution on this weekly candle is right on top of the mean of the projection from the 41K low. There's only a 4.6% chance on this weekly candle BTC closes above that projection. Now, if BTC can make its way up the rest of this week and close up here right around 44K, that's going to be a lot of steam for next week's candle to bust back upside here and close next week's candle above that mean. And if that happens, you're going to see Bitcoin back up here around $60,000. I'm just saying it right now. Mark my words. If that scenario plays out like that, that's exactly what's going to happen. So keep an eye on it. But at the same time, we know how Bitcoin does it. Guys, look at these wicks and look at how the weekly candles ended. Why? Why is this happening? The bears are going to defend the hell out of that area. You don't think that these algos, you don't think that that they understand what the hell I just said? They're going to defend that area. They do not want a weekly candle closing above 44K. Guarantee it. It's not going to be good. It's not going to be good at all. And if you go up here, where's the like? So if you're coming from traditional TA, let me draw one of your little magical lines that you fruitcakes love to use. Okay, let's put one right on top of the mean of this projection. And it's, yeah, old yeller. We need to make it a line though, right? The old yellow 21. Where's your data set, right? Where does that make any sense? Is that where any of you traditional TA people are putting, is there a data set? No, you'd be down here. Here's where your data set would, here's where you would have a support line at. Why? Well, you got these candle closes right here, right? You traditional TA junkies getting led around the junk by YouTube Jimmy. Look at the wick right over here. YouTube Jimmy's going to tell you, hey, that area right there, that's a great place to put your support and resistance, right? And if we drop below here, you can stay in your short. If you want to put a stop loss, yeah, put your stop loss a little bit above that area right there. Look at these wicks. Stopped out. You're stopped out. You're stopped out. It's just one after another, man. It gets old. It gets old seeing how YouTube Jimmy likes to run people around. It's crazy, man. Shout out to you, YouTube Jimmy, you DGen. All right, let's go over here because I liked what I saw here. So here's yesterday. Look at this 4-hour candle right here. That was, whoops. That was this right here. Whoop, whoop, right? That was the madness left behind. Look at that wick, man. Literally opened up that candle, ran it up, boom, ran it back down, closed the 4-hour right here. Look where it, look. And then the next 4-hour candle came down. Where did it find support? Look at that wick. It found support, right? Which is that? Hold on, give me 1 second. Right on the 9-length variance log moving average, which was right by the 33 length. Now look, the 9's crossed up the 33. The 9 is getting ready to cross up the 99 length variance log moving average. It's already crossed up the reverse wave trend. The 33 is making its way, going to pass the reverse wave trend. Both of them are going to make a run at the Fisher, right? And the wave trend's going to try to cross up the reverse Fisher. And that is a reverse wave trend for all you new people coming from a traditional TA. These are powerful crosses. When you're talking about log return moving averages and a reverse wave trend and a reverse Fisher, that's good stuff. When at Alpha Trading, we could give a shit less about your little golden crosses, your little death crosses, your little goofy YouTube Jimmy crosses, man. We don't care about them. Stupid. Um, Look at this 4-hour candle though. So people, after all this, after all their little swing trade and they got wrecked, they're still licking their wounds. They're like, oh, it was just a fake out. Now we can get in our long. Wrecked again. This is why you do not swing trade Bitcoin. They got how many times yesterday did these guys, they always got to be in a trade. They're just trying to get into that swing trade where they can show everybody that, look how much I made. Yeah, I was 80x leverage, man. I made a bunch of money. It's great. Those guys do long term, they're not making money. Wake up if you're watching this for the first time. It's the internet. They're lying to you. They're getting wrecked. Tell them you want to see their P&L. All right. Tell them you want to see that. Tell them you want to see their edge, what's making them a great trader. They won't show you either one of them, man, because it's all bull crap. Here is the Gaussian mean of the deviation bands. That Gaussian mean right now is at 40,682. So 40,682. Literally right in between the top side in the middle of the daily price action volatility range. What is that? 40.3, 40.8. Oh, I do recall MJ. I said that we already talked. Me and MJ already talked. I told him where I thought the new daily was going to be at, and I was only a few bucks off. And the width, I was only about 50 bucks off. Good stuff. Trust me. They don't like people talking about this stuff. They're running a scam. All you retail traders out there, you are their liquidity. They do not trade. They're lying to you. Know it. So Bitcoin going to come down and test this daily range somewhere in here. The first standard deviation normal distribution on this first hour candle, our first 4-hour candle. This is the range right here. That skinny blue line's the top. That's the 1SD to the bottom, 40.7. That is literally right around the Gaussian mean. So there's a lot of support there. A lot of support. Wouldn't be a bit surprised to see a wick down to this Gaussian mean and suck up from there. If these bulls are going to take charge. See here. Let me go. There's the VRE. This is why this is an important area. The middle of this monthly range. If BTC finds support in this area right here in between the 1SD and the center of the weekly or center of the new daily, bounces from there, closes this first 4-hour candle above the weekly R1, that red dotted line, or the yellow cross line. That's the center of the monthly volatility range. BTC immediately is going to make a run up here to like 42,182. It's 42,174 to be exact. BTC is going to make a run up to there. Okay. And then we're going to have to see. This is the last line of defense right here. The bears are going to defend this with everything they got. They do not want Bitcoin to close even a 4-hour candle above here. This is why, look, they pushed down hard when it even started to get close. This, though, not getting a big rejection like over here or over here, that's a good sign. That's a good sign. They're like, hey, man, should we switch sides? Hell, we all want to make money. Let's just send Bitcoin to 100K. Fuck it. Sometimes it just boggles my mind, and I wonder what's really going on. Why is the market being suppressed? They're afraid. They're afraid of crypto, right? So they're going to lie to everybody. We're going to ban Bitcoin in the European Union. You can't ban Bitcoin, you bunch of moron politicians. You might be able to go to the exchanges because you got them scared to death of your ass, right? And tell them they're not allowed to sell Bitcoin anymore. People will find Bitcoin. So they're going to lie to all the new people that want to invest in crypto and tell them, oh, it's banned. No, it's not. You can't ban cryptocurrency. That's what's so funny. But they take advantage of new people that don't understand what cryptocurrency is to begin with. So that's what I'm looking for. I'm looking for a bounce right around on the Gaussian mean. If that happens, and if Bitcoin drops down here and then creates like a volatile bullish hammer, right, and closes up there, what I say? What was that at again? Go back to the VRE. Yeah, 42,175. Wow, that'd be a little higher. We're talking up here. I'll tell you what, if we get a wick down here and you see BTC close up here, if a big bullish hammer, man, this thing could explode. This thing really could explode. So let's go. Let's check it out. Got the 4-hour trading chart up here. Sayron asked a good question in the chat. The only thing I'm struggling at the moment is to identify the trend of the day or where to put my full size when there is no clear divs and the other indies are contradicting. And he's like, I mean, like when the 4-hour, the 90-minute, and the 45 is not very clear, I usually tend to use a third of my account to trade. And I'm going to tell you right now, Sayron is a poker player. That right there, he answered his own question. And I guarantee you, if he wasn't a poker player, he wouldn't even put that question. This is why some of the best traders that come over and do this stuff are poker players, because they understand about proper sizing, right? They
and risk management.
risk management. They understand how to use their account, right? So if you're like, everybody knows how I do my workflow. I start the daily on a 4-hour, I go to a 90-minute, a 45-minute. I'm trying to get a bias of a direction. So when I'm trading the 15 and 5-minute charts, I know where to use the full power of my account. If I've got 3 Bitcoins in account and the bias I'm reading on the 45, 90, and 4-hour is that Bitcoin is predominantly going to be moving to the top side, I'm going to allocate 100% of my account to the long scalps. Now, I'm not saying there's not going to be counter trades in there against the bias I have. But when I'm counter trading, I'm using a third, even a quarter of my account. And so, Sayron, being a poker player, he immediately said, the charts on the 4-hour, the 90, and the 45 was not very clear. So I usually tend to use a third of my account to trade, right? And what I said before we started this stream, I was like, that's great. That that's coming from a poker player, because I told him, I was like, if you go into a poker room you have never been to before, you got to get a read on the room. You're not going to sit down and just start fucking playing your game, right? You're going to be very cautious. You need to see how people play, right? And that's coming from a poker player. That's why poker players are great traders, because they understand risk management. They understand how to use sizing correctly. It's a great thing, man. It's a great thing. Both very stressful life. Trading low time frame volatility and sitting in the poker room, highly stressful. Highly stressful. So what am I seeing right now in the 4-hour? I can tell you right now there's some hidden bull divergence on the return oscillator setting up. I can tell you right now that there was, especially with these 4-hour power moves right here, there was not an outlier on the log return Z score. There was not an outlier that got up into the higher confidence intervals. Not only was there not an outlier, but it bounced off the 90% confidence interval. There's no bear divergence. I mean, you can see right here, there was a little bit. See the higher in the returns oscillator? That was barely a lower high right there. Shot the returns down. That was what that wick was from right there, guys. That was that bear div. Boom. Right? Because what is divergence? The divergence between returns and price action is showing you the imbalance in the buy and sell pressure. The returns will make the move first and price action follows. When you see divergence between those returns and that price action, it is literally a red siren in your face saying the return on your investment is diminishing. Get the hell out of your trade. Take your profit. Whoa, Bilbo, yeah, that sounds all easy. Where do I take my profit? You take your profit at volatility range levels, at distribution levels. Like right here, If I was in that move, where am I taking my profit? I'm taking my profit at the 1SD. Did I miss a little bit of the top of that trade? Yeah, but my limit order is literally sitting there, right? Because that's how I get out of trade. Limit orders. Very rarely do I have to mark it out because the volatility will dictate to me, this is a powerful move. I'm going to look for the distribution level. I'm probably going to front run it by 50 bucks and take profit right in here somewhere. That's $1,000 move. If my bias was to the top side right there and I had 3 Bitcoins there, hello, you made 3 grand in a half hour. This is not brain surgery. Trading's easy if you have the right tools and you understand how to use a workflow. I'm not saying it's easy to learn, but once you learn it, man, dude, it's just a little stressful because you're sitting in front of monitors all day intraday trading. It's not the funnest life, but it's very, very profitable. If you let it, you got to let yourself be profitable. The only way to let yourself be profitable is to not be emotionally attached to your positions. Professional traders do not get emotionally attached. If you're emotionally attached, you're not going to allow yourself to take that profit or limit your loss, right? I mean, it's just simple. When I explain that to people that have never, that are having trouble trading, bingo. I mean, like a light bulb goes off in my head. Well, holy shit. You make it sound simple. I'm like, because it is. You're complicating it. Trading's not complicated. YouTube Jimmy is going to have you so jacked that you're going to think that trading is so hard because you're losing all the time. Because you're listening to YouTube Jimmy. If we were playing the YouTube Jimmy drinking game today, everybody would already be drunk. Love it. Now, if that wick right there on that 15-minute candle, that would be a daily range tested. I just know how Bitcoin is though. I know how Bitcoin is. And I do think being under the monthly range here that these bears are going to try to push this down. The bulls will be waiting down here about 40.6 area, I would imagine, if not the first standard deviation. So 40.7, which I already showed, right? 40.7. It's right here. It's right at the Gaussian mean. Usually on a move like this, you're going to come down and test this Gaussian mean. I mean, this wick, woo, ran it all the way down through the reverse fissure, nailing the reverse wave trend. Why? These crosses are powerful, man. You're going to get some wicks down the test to see if the bulls mean business, right? Or you're going to get this. You're going to get a rollover, just like this again. Hopefully, that's not going to be the case. The bulls, at some point here, are gonna stand up. I mean, what's going on, people? Let's get our shit together here. All right. So 4 hour. To be honest, too, I could definitely see that 40.7. Hell, we might even, now that I just take a quick peek, I'll have to look at the lower time frames. We could even test the bottom of the monthly. 40.2 area, maybe down here at the bottom of the daily. 40.3, run a wick down, and then close that first 4 hour candle back up above the Gaussian mean. Let's see what happens with that. Why am I saying that? Well, like I said, there was not an outlier that sent the return or the log return z-score up into this 90% confidence interval, but it has turned down. The returns oscillator is down, but what's it setting up? It's setting up. It's going to be setting up, especially if this price does drop $500 to $800 right here. It's going to set up some nice hidden bull divergence, right? A lower low on the oscillator. Low. It's already setting up a lower low. Low. This would be a lower low somewhere in here, right? We drop down to about 40.1. Maybe close this 4 hour candle down here, set a bottom, and then boop with some hidden bull. The fissures, are they up high? Yeah, but look how tight the bands are. Fissure bands are really tight. Do like that. DLP is looking good. There's no bear div on the DLP, no bear div on the fissure. There's no bear div on the log return z-score. There was a little bit of bear div on the returns oscillator that, in my opinion, played out big time with that big drop right there, about $1,000. You have contracting entropy percentile negatively correlated. That is telling you price action is going to walk up, right? But the entropy itself, losing correlation to the top side as it comes back up, heading back into randomness. So this could continue, this 4-hour candle, and next 4-hour candle, just click right back down in the trend. Go light blue again up here on the correlation. Boom, to the top side. The volatility starting to expand a little bit, though, negatively correlated. And we're having a slope, a negative correlation with the historical volatility z-score heading up, kinda. It's almost looking like it wants to roll over, which would be fine if it's negatively correlated. So we're getting a little bit of a mixed bag on the 4-hour over here. I do like that the variance has turned down. You can see, had the variance right here started heading up, positively correlated at the end here on that big 4-hour candle, had an outlier. Variance turns down, negatively correlated, kept walking up. Had that one wick, but because that variance was negatively correlated, it was bound to suck back up like that. So that's looking good, 4-hour. Let's see what the 90 looks like. And by the way, traditional markets did, exactly what I said they were going to do. And I'm going to pop over there as soon as I go through these quick time frames. Let's see here. Now, bear div on the returns oscillator on the 45. Not really on the DLP. The entropy percentile is looking like it's almost ready to expand. It's positively correlated, but like the 90, losing correlation, heading back into randomness on the regular entropy. The z-score is actually looking like it's trying to turn back up, positively correlated possibly, but we are contracting volatility with a positive correlation. From what I'm seeing right now in the 90 and 45, this thing might drop about $1,000. Like I said, about 8, maybe down to 40.1 or so, that area. That could definitely happen. It's barely holding on to the Gaussian mean right here. Look at those beautiful deviation bands, all right? We get that big 4-hour, boom, even that dropped back down, right? The first standard deviation band. Boom, rocketed back up twice. I seriously doubt we're going to go down 39.4. It's not too far below. That would wreck some more people that are just don't know when to take profits. Let's see what this 45. Oh wait, that was 45. Yep, 15 now. Looks like the 15 minutes trying to bounce. No dive. Jesus. No div. The div is hidden bowl, to be honest. Hidden bowl, right? From right here at this bottom to this bottom. There is some hidden bowl. And it's looking like it's trying to find some support. So, hey, man, this could go either way short time here. Maybe we don't go down to 40.1 and the 45 and the 90 switches up. So right now, if I was trying to get bias on that 4-hour 90 and 45, let me go back to the 45 real quick because that's contracting positively correlated. Let's see here. At this point, I would probably be allocating all of my entire account to the top side, to be honest, especially when I go down to 15. Yeah, yeah. Let's see what this looks like. So it looks pretty good. This power mean band. Where's that reverse Fisher? 40.7. That one, and there's that 40.7 there again, right? So maybe we don't go down to 4. Maybe we don't drop 800. Maybe we just go to this reverse wave trend too. Yeah, that's pretty much the old BTC analysis. That's what I'm looking at there. Now, let me talk about something here real quick because I know yesterday in the stream I talked about this with Solana and Lady. So, where's me watch this? Where's me traditional shit coins? There we go. Old SPY. What did SPY do today? Now, you remember what I said yesterday? If you go to the stream yesterday and you watch it, I know I said traditional markets look bullish to me. Why? Because yesterday SPY ran up and closed above the entire weekly range. And I literally said, if SPY pre-market goes up and opens up above the R1, you're probably going to get a move up to the monthly range. What happened? What happened? If freaking pre-market opens up right above the R1 on the weekly price action volatility range. Does a 1SD move real quick, of course, finds some resistance there. All right, there's a 68.3% chance it would stay below here. Runs it up, tests the bottom of the monthly. Down we go. Where did it find support at? The top side of the new daily range. Well, why did that happen, Bilbo? Because the daily ranges get tested, right? And that's exactly what happened. SPY pre-market ran away from the new daily range, tested the monthly, came back down to test the daily. What happened? The bulls were there going, see you bears. Look where they closed today. Above, in not only inside, above the center of the monthly. So let's see here. I'll tell you what, if pre-market tomorrow opens up above the weekly R2, you're probably going to see a weekly R3 move tomorrow up to like 447 and have another massive 10 to 12 point day. So it's looking good, looking real good. But literally, this thing did exactly what the charts were telling me. Exactly to the T, what I said was going to happen, happened. Why? Am I some magical internet trader? No, man. We got magical internet indicators, though. 100%. Alpha trading does not dick around. We trade. If you're watching this on YouTube for the first time, we trade volatility, probability, and statistics. If you want to trade cryptocurrency and you're using traditional technical analysis and you're watching YouTube Jimmy thinking you're learning something, I got a news flash for you guys. You're being scammed. What's the cure to all that? I'll tell you what the cure to all that is. Alpha Trading has a very tight-knit community of volatility traders. The link to our Discord is in the description of all of our videos. You need to come into the Discord. You need to check out our shop channel. It's got the two different levels of Discords you can subscribe to. Yes, there's a paywall. Why, Bilbo? Because we got to keep out the haters, man. We got to keep out the riffraff. If you want to come into our waiting room and ask questions, knock yourself out. We'll answer any questions. You know, if you want to come in and cause trouble down in the waiting room. But to get in our main Discord, where there are a ton of channels, a ton of information about volatility, probability, and statistics, and the access to use the alpha trading system depending on what level you purchase, it is a no-brainer. Open up a support ticket. Tell us what's on your mind. We're a friendly group of people. I know sometimes I come off a little harsh. I'm very nice. I love to help people, and so do the other 5 founding members and other volatility traders in this Discord. There are some very bright individuals in here. So do yourself a favor. Stop watching YouTube Jimmy. Get off the traditional TA crack pipe and come and join our group. Right? We're calling out to you. And I want to thank everybody for watching live in the Discord today. That's another bonus to being part of the Discord. You can watch these streams live Monday through Friday, 5 p.m. Pacific time. And other than that, wherever you live at on this big, beautiful blue marble, have a wonderful rest of your morning, afternoon, or evening. We'll see you tomorrow, 5 p.m. Pacific Standard Time. See you guys.